Good morning to all traders and welcome to this Wednesday's Market Insights video. It's the 4th of September today, Wednesday, and we're going to talk about oil and also gold. Both have been affected by the opening of the New York market after a very long weekend. And of course, after additional tariffs were added on Chinese imports to the US. Following this, of course, the US dollar was negatively affected and it dragged the oil down because oil is being purchased by China in big chunks. So that means that as long as China is in trouble, then oil demand will be down. Now, gold on the other side moved to the upside because there is, of course, this trade war narrative that is worsening. At the same time, we have a domestic uncertainty in Britain and also Euro-wide uncertainty because there is a lot of turmoil now increasing between EU and UK. Not that the EU has an active role, but obviously it depending on what Parliament will do and what will decide to do, it might have to involve the European Union to a further extent. Now, at the same time, we have the API report coming out today, and this will be very interesting to watch for the oil market. Don't forget that yesterday as well, we had the first very surprisingly, contractionary ISM manufacturing PMI, and that means that the trade war is really hitting back US on the foot right now, and the expectations, of course, from 51.4 down to 49.9. This is a big invitation for Fed policy shift and also maybe even for a US intervention. So let's see how this is going to turn out in the near future. We have a number of PMIs today from the European Union and retail sales. Later on the day, we have the inflation hearings from the Bank of England and the BOC interest rate decision. Bank of Canada decides on interest rates, very important day. And then, of course, we have a number of FOC and Fed members speaking, and that is going to probably add a lot of volatility onto the markets. So starting on the gold, we still remain with the same view. This is wave one, this is wave two, and then we're going for wave 3, 4, and 5. Now, unless if, and over the past few days I have been looking this, unless if becomes an A, B, C. Okay, if that were the case, that would be a zigzag, and we're most likely to end around 1573 and then start moving lower. Now, if the this last move to the upside stops right here and prices move lower, it means that we are in the impulsive scenario, okay, and we had an A, B, and we are going to have wave C. Now, wave A, this is an expanding flat, right, because we stopped around 1556, which is the 38.2 Fibonacci extension, and then wave C, we're expecting a 5-wave move, okay, because an expanding flat is a 335. Now, because we're looking at extending at 1618, this will be around 1444. Of course, if prices move higher, then we're really most likely looking at this not being one anymore, and this is going to be a zigzag. Okay, so keep an eye on that. Now, on the 1 hour time frame, and if we assume that we are still in this ending 5, okay, and we have A, B, and we're waiting for C, that means that we really want to see now this is wave 1, A, B, C. This is like a flat pattern, okay, and from here we're waiting 1, 2, 3, 4, and 5, okay, in the shorter term. Now, if prices move above that level, then we're really looking at invalidation at around 1573 or a confirmation that this is indeed an ABC zigzag rather than an impulsive move. Now, on the oil, on the 4-hour chart, we still remain the picture is the same. It started changing a little bit more biased to the upside, okay, and this is because we've got a 1, we've got a 2, and most likely what we're looking for now is to start 1, 2, then 3, 4, and 5, okay, and that's because we keep forming higher lows, okay, which is indicative that there is some sort of bullish bias rather than bearish. Okay, now, of course, the top level to watch in case we move higher after this break, right, would be this trend line over here. Now, down on the 1 hour, now I was talking about this being in 1, 2, and most likely we'll have wave 3 up here, right? So how this is turning out is that we've had already an impulsive move to the upside with a correction that it was complex. So this can also be a WXY, and an ABC that ended with a 5-wave move to the downside between the 52 and 53 levels, which is between the 78.6 and 61.8 Fibonacci ratios. Now, if you ask me, this looks like a very nice 1-2 wave. It wouldn't be a minor, it would be, yes, minute. And then we're looking at 3, 4, and 5. We want really the wave 3 or wave 5 to break above this descending trend line to start really validating that oil is indeed going to move to the upside. So I want to thank you for watching for another day. And as always, I want to remind you to visit our blog. It is the place where we cover the latest news and headlines, provide trading signals, and also all the necessary tools traders need.